Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today is the 23rd, 23rd of March, 2023. So, yep, nice, beautiful 23-3-23 number combination. So, yep, hope you're having a wonderful start of Thursday. Too bad it's not Wednesday, then we would have another 3 in there. But hey, you can't get everything, like with the markets as well. So guys, like I said, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, just in general, some of the charts that we looked at yesterday, a few new ones as well, but to see how everything kind of played out. But yeah, guys, look, before we jump into the charts, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll switch off a little bit. I'll give you a few minutes, a few seconds to read the rest, and then we can continue. Okay, so I'm back here now then. So also, just before we jump into the charts, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, just drop us an email, a message. We're there. We're here to help. So check us out there. But yeah, guys, let's jump into the charts. And before I jump into the charts, good morning to Ian Kowech. I don't know how to pronounce it correctly, guys. So I do apologize for that. But yeah, good morning to you. As you can see you there in the chat room. Good morning to everybody else who's joining in right now. So yep, pleasure to have you here. So yeah, guys, let's like I said, let's jump into the charts. So the first one I want to pick up here is Nikkei 225. So in general, yesterday we had the big Fed announcement, the big Fed meeting, and then the press conference. So it was quite exciting and quite interesting. And look, I talked about this like yesterday as well in my video, and it was kind of saying that look, the 25 basis points is the most logical one at this point, because again, if it wouldn't be any increase, then yeah, that would allow the market to rally and just kind of, we could go back to that higher inflation. And if we would see, let's say, a 50 basis points, then maybe the market would kind of take it as a very, very strong negative, and would probably sell off quite rapidly. However, in general, what we got yesterday from the Fed was the fact that what they said, that they're not planning any rate cuts. Well, to be honest, I mean, kind of not really a surprise, but they're not planning any rate cuts this year. However, they're prepared to step in again and increase them if needed. Well, to be honest, that's kind of obvious, and this is something that we already kind of know. But I think that they were trying to kind of deliver it in that way, that it's something really new and extraordinary. But in general, in my opinion, it seems like we said a lot of words, but we kind of, in order to just to kind of stick to the same path as we are right now, just a gradual rate increase. Look, of course, people somehow started talking about rate cuts and everything like that, but I think that, look, there was never in the in mind right now. I mean, they're okay for next year, maybe, just to see how everything goes. But this year, yeah, it's either flat, or just kind of an increase. Again, they mentioned that they might consider a pause. And to be honest, this is what all other central banks started, picking up on. Like, yeah, we'll also consider some pauses and everything like that. But all this will just kind of put the indices towards more positivity, in my opinion. Again, let's see how that's going to play out, of course. But at this point, looking at, for example, at Nikkei, okay, look, we did decline yesterday a little bit here. We tested that 27,000 territory, but we stayed above this whole highlighted zone here. So in order to go lower, guys, I need to see a nice good drop below this highlighted zone here, this 26,950 territory at least, and then we could go back down. Now, we remained above this territory, and we kind of came back closer to the EMAs. We did have a false breakout here, as you can see here as well, but we still kind of ended up being near these EMAs. So we're kind of what I'm expecting here on Nikkei is maybe a bit of oscillation around the EMAs for the next few days, or should I say next few trading sessions, unless we strongly push through the EMAs here. We start clearing yesterday's high here on the futures. By the way, all the indices that I'm looking at here are the futures, so yeah, you might have slightly different pricing if you're looking at the cash, just to kind of let you know about that, guys. So let me just adjust this very quickly. So if you're looking for some higher levels, guys, on this one, I would say wait for at least a pop somewhere above this 27,440 zone right here. If we get a nice clearance, this will confirm a forthcoming higher high, and we could start aiming maybe for the 27,863 or even above that. Let's wait and see. But as I said, for the downside, I need to see a drop below this highlighted zone right here again. Yes, we did have that drop already, but I need to see another drop below it, and then I'll start considering some lower levels. Of course, some of you might say, but hey, Darius, what about the little short-term trend upside support line taken from the low of the 15th of March? Well, it could be a nice, good target, but look, let me just get rid of it. Yep. But look, I mean, if that is just a short-term tentative one, so in a way, if it gets cleared, then, well, yeah, I mean, we could see, further decline. So just kind of keep that in mind. ASX 200. So this one's drifting back down. I'm not really considering this one as a huge significant drop right now, because again, what I was talking about previously, I was kind of hoping to see maybe a drift to the 200-day EMA here. We're seeing a bit of a retracement. That's fine. That's okay. Yesterday, yes, like I said, the market kind of picked up on the whole, initial positive. In a way, it sounded like initially it was positive from the Fed. The Fed was kind of a little bit more on the hawkish side. There we go, with all the rate hikes, and that's why the market kind of rallied. But then the Jerome Powell quickly kind of not reiterated, but kind of made a comment that we're ready to continue to raise interest rates. I mean, just kind of to bring the market back down a little. So at the moment, I think that what's going to happen here is that we're having some data today. We're going to have some U.S. data, initial jobless claims, continuous jobless claims. We'll see how that plays out. Of course, I think we do have the not the building permits, initial jobless claims. Let me just quickly have a look. New home sales, there we go. That's going to be an interesting one. So new home sales coming out from the US as well, so let's see how that is going to play out. But hey, look, at this point I'm going to take a very careful approach, and let's say if I'm looking for some lower levels, then I'm going to wait for a drop below the 6,917 territory in order to go lower. Yes, I'm considering this scenario still, but for this one, I still need to see a better kind of test of this 200-day EMA together with the 7,100 level here. So Yeah, at the moment, like I said, it's not really working out ideally, this curved move to the downside, but preferably I would like to see a drop below the 6,917 territory in order to get a bit more let's say bearishness here. I can see there in the chat room, oh yes, Patel, yes, I mean, look, you can drop a question, of course. I mean, if I'll be able to answer that one, I'll tell you, hey, I know how to answer that one. But if I'm not going to be able to answer that, so sorry, unfortunately, I'm not going to be able to help. So just drop it in there. I'll pick it up while I'm kind of covering the other instruments. So Dow Jones. So there we go, the US indices. So yesterday we had yeah, it was quite interesting. Initially we were in positive territory, but then boom, we had a nice drift to the downside. Look at this, how well it played out technically. So we've tested that downside line, we broke it, and we pushed a little bit higher towards the EMAs, and look how well the EMAs provided resistance, and then we kind of drifted back to the downside. So at the moment, what I'm going to say here is that, look, we fell back below the well, I talked about this 32,555 territory, and I said that if you're looking for some downside, then maybe initially you could start examining the downside if we do drop below this little hurdle. This is by the way what I was talking about yesterday in my morning video. But for me to get a little bit more comfortable, I need to see a clear drop somewhere below this highlighted zone right here, which is roughly between the 31,740 and the 31,888, approximately around there. Because again, look, I mean, it provided good support. It did, yes, it did violate it a few times with these false breakouts. But again, those are false breakouts, and then we can see how well this territory held. So that's why my preferred downside scenario is from around here. However, from the very short-term perspective, yes, 32,555 territory is something that I mentioned yesterday. We fell back below it. So as I would say now, and by the way, we reached my kind of target, the 32,310. Yes, we slightly overshot it, but eventually kind of, yeah, it did hit that. So I can remove that. I think that not to overcrowd the chart. Yeah. And at the moment, I would say, as long as we stay below this downside line, there is a chance for a drift a little bit lower. But I would say just remain a little bit more on the cautious side, because again, if this suddenly starts pushing through this downside line, or let's say, first of all, if it starts getting closer, so yeah, this is just a second. So yeah, if we do drop below this downside line, then yes, if we, like I said, if we do drop below this upside line, sorry, then yes, we could go a little bit lower here. Sorry, I was reading a little bit the question here from can derivatives contracts volume move underlying assets? Well, that's a tricky one. Honestly, you got me there. If you're trying to kind of, check me here on these things, yes. So it's I believe that, yes, it could, because again, if the derivative contracts volume move underlying, it's not the volume, it's the underlying asset that's the moving. So it's kind of, then it moved. Look, this is the underlying asset is the one that's leading kind of the game here. So, look, I think you got me there. That's a very good question. So, if you want to drop it in there, your own answer, then yes. But I think that you should seek other better sources than my sources. So then, yeah, so you should seek better information on that one. Look, I'm not going to be able to help you on that. So if you want to, like I said, Google it, you want to go to Investopedia or something like that, just, yeah, feel free, guys. But the moment, look, I'm covering here the technicals. So if you have a question like that, I think that it's better to go online and check that out. So yeah, like I said, if if this is if this was a trick question, you just wanted to test me or something like that, hey, good job. Look, basically coming back to the indices here. So Nasdaq 100. So Nasdaq had a beautiful move here to the upside. Of course, we initially cleared the 12,950 territory. We tested the psychological 13,000 mark. okay. Look, I think that for this, I think that this is not the show for this one, for these questions. So look, if you wanna, like I said, check that information, you can check it online. Honestly, I think that this is not the kind of the educational part of it. We're doing a technical analysis on the chart. So look, I really appreciate your questions, but I think that I'm not the best person to answer those. So like I said, I think that there could be some other better analysts or better educators in there who could cover those questions for you. So, but yeah, thank you very much. Yeah, look, check it out. Honestly, there is information on that. So just like I said, let's continue with the technical analysis on the instruments. So, but yeah, thank you very much for that. So well done. Well, good question to test me in the morning here. So yeah, thank you very much for that. Anyway, guys, look, coming back to the charts, DAX, the German index. So look, what's happening here? Basically, this is the futures here, and at the moment, I would say, if you are looking for some positive moves here, or let's say looking for some more upside, you wouldn't be wrong here, because the fact that we managed to stay above the 50-day EMA in general, above all of our EMAs here, or my EMAs here in my daily chart, that's kind of a sign of positivity in a way. However, the only issue that I have here is, for example, okay, we cleared this barrier, the 15,315, okay, but I think that we cleared it in a way, but then we violated it back again. So that's why I think that the easier option is, first of all, to remove it. Again, what we're gonna do here is I'm gonna stick to the hurdle here. This is gonna be my new little target here for the downside in the short run, because again, the 15,160, as you can see here, it nicely coincides with the 50-day EMA. And then yes, we could, if we do drop back below it, this could place, or should I say, bring some negativity back onto the table, and it could in a way open the door back to the 100-day EMA. So as we can see here, so far these EMAs were playing out nicely here. So in other words, if you want to look at some lower levels, guys, at least wait for a drop somewhere below this 15,160 territory, which is coinciding with the 50-day EMA. In terms of the upside, now this is where I'm kind of leaning a little bit more towards the upside right now, because again, first of all, we're above all of our EMAs. That's great. And if you're looking for some higher levels, still probably the maybe a better option is to wait for a break of this downside line. Again, a tentative one, a short-term tentative downside resistance line taken from the high of the 7th of March. But at the same time, look, from the shorter term perspective, maybe we are coiling up here, could be coiling up, but again, on a daily chart, it looks a little bit more clear. So this kind of movement here could be a little coil. Maybe we're getting into a bit of a squeeze, as I said. So yeah, if you're looking for some upside, I would probably suggest to wait at least for a break of this downside line. However, then look, don't forget, do not exclude the possibility of false breakouts as well. So that's why if we do break through it, I would like to see it staying above that downside line. If we stay above it, then yes, great. My next target is the 15,500 level still. And if that gets cleared, yes, the other target is the area near that 15,700 zone, which provided fantastic resistance back in February, in the beginning of March as well. So yes, with slight little overshoots, but hey, it was a good move here. So at the moment, look, long story short, I think I talked already a lot about this, but long story short, if we do clear the downside line, this increases the chances for a move higher. Can you share your views on Indian markets, Nifty and Bank Nifty? These two are in. Yeah, I get it. I know those. Look, I will look into this next week, but again, this is the Indian market is, I mean, okay, indices move, most of them move in a way similarly with some, some different caveats, but sorry, I just kind of jumped off from the DAX right now because I have a question here from Oyas Patel. So in terms of the look, in general, most of the indices move kind of the same in a way. Yes, there are some markets that kind of do move differently, like the Russian index, the Indian index could be one of those as well. So for that one, to be honest, I would need to look into it, and I would probably like to get back to you on this one, because again, it's not something that I really looked into very much. But if I see that, for example, it's it's quite, let's say, interesting, and I can deliver something on it, so yes, look, I'll pick up on this one. But again, I'm sorry, like I said, I'm not the biggest specialist in in the Indian index. However, I do understand that most of them kind of still move similarly, so just kind of consider that. Look. Coming back to the indices, the dollar index, there we go. Look, I talked about this a lot, and I said that, hey, we were having a nice falling wedge pattern here, which kind of nicely didn't work out, because look, I talked about this, and I said that wait for a confirmation break of the upper side, because you cannot, although it is it could be seen as a bullish pattern, because again, a falling wedge is considered as, according to all the TA rules, yep, like I said, it's if just a second. Okay. Oh yes, Patel. Look, wonderful. Okay, wonderful. I mean, I think there are like people who are covering on TradingView Nifty actually specifically. So honestly, there are wonderful analysts in there as well. You can check those out. So try to have a look at those. But yeah, coming back to the US dollar index, look, what I was talking about previously, I said that if we do break the upper side of the falling wedge, then yes, great, more buyers could join in, and potentially this could open the door back to the 50, the 100, and the 200-day EMAs. But instead, we had a break here, and to the downside, and I talked about this 102.39 level, so I said that, hey, if we clear that one, then yes, it's kind of opening the door potentially towards some lower levels. Well, first things first, we can get rid of the this lower side of the falling wedge, because it's no longer a wedge, because again it got violated. So now we might see this one, we might consider this one as a falling channel here. Again, you have to adjust as you go here. At the moment, it seems like it's working out, but hey, look, I would say yes, my next target is around here, or still is around this 101.26. I want to see if we can get a nice good test of it. But if we do clear this lower side of the falling channel, again, this is not a falling channel anymore, then in that case it's just a free fall, and then we could see maybe a test of this 100.67 territory, which is the lowest point of February. So long story short, again, at this point, if you're looking for some higher levels, I think it's a little bit of a difficult one, because again, for the upside, I need to see a clear break of this downside line taken from the high of the 8th of March, and which is also currently considered as the upper side of the falling channel. So yeah, if we do clear it, then yes, I'll get a little bit more excited with the upside. Now, jumping into gold, guys. So yesterday, what I talked about gold was that if we were considering some lower levels, I mean, what I needed to see here is a drop below this territory right here in order to go lower. Yesterday we rebounded perfectly from that 38.2% retracement, and what I said yesterday as well, that if we do push back and stay above the 1960 territory, I'll get a little bit more excited with the upside again, and then I'll start targeting that psychological 2000 zone, and then we could take it from there. So long story short, for now, it's working out nicely. Look, even if we do retrace at some point, as long as we stay above the 1960 territory or this 23.60 zone, then yes, I will continue targeting the upside. In terms of the downside, as I said before, yes, this is my preferred scenario. This one right here, a drop below this 38.2% retracement on the Fibonacci, together with that 1935-37 levels. But at this point, I think that if we do start falling already back below the 1960 territory right here, I will get a little bit more excited with the downside again, and with examining the 38.2. So yeah, let's see how this is going to play out. Like I said, I'm leaning a little bit more towards the upside right now. If you're looking for some sort of a breakout point here for the upside, then you can consider this one, 1983, 84 actually more closer, because that was the high of the of Tuesday. That's the Tuesday's high, the 21st of March. And look, so far, let's say this morning, we are getting a little hold up around here. So if we clear it, this kind of, I'm not saying this will confirm a forthcoming higher high. No, not really, because we have this one here. That's why it could increase the chances for a move towards that psychological $2,000 mark, and then maybe so on and so on, a little bit higher. But again, at this point, like I said, that's the game plan. Unfortunately, if it's not, not something that you really like or doesn't align with your strategy, well, again, it's a difficult one, because the market right now will be deciding today, tomorrow, what to do further. But it seems like that, the indices are a little bit in the pickle right now. They're trying to digest. So I think that we need some more data. We need some more, maybe some sort of events coming out, positive, not positive, and just to kind of, to see where we can go further. So now then, oil, jumping into oil very quickly, guys. So the psychological $70 mark. So there we go. We are testing it again. Yesterday we broke it to the upside here, but look, we tested the downside line here as well, the one that I talked about, and the question now here is, can we see that little kind of curved up move back down? Well, that's a good question, of course, but look, what I also said, that if we clear this downside line, my next target is the area near the upside support line, which got broken. Now, what I said to you previously was that, look, whenever we get a break of the trend line, there is a tendency to test it from the other side. Again, not always happens, but probably maybe like 60-70% of the time it happens. It does kind of come back and test it from the other side. So in this case, if we broke the upside line, we could see, a retest of this upside line. And again, then you could say, hey, but what about this line, this downside line? Again, I agree, this could be the case as well. We could see, drift back down, test this. Basically, something like this could happen. So basically, could if, let's say, if we break the downside line here, we could go higher, test this upside line, and then maybe get a bit of a retracement, and then something like that. Although this is where I need to probably correct myself as well. Although from the short-term perspective, this is the scenario that could happen, but to be honest, overall, I am a little bit more bearish, because again, if the goal is to kind of lower down inflation and to kind of limit our spending of us mortal people and general businesses as well, so to limit our spending so that we wouldn't be spending that much, not creating that inflation and everything, so oil might overall continue sliding. So in general, this could be a bearish indication for oil. So at the moment, look, I'm going to go from what I have. I'm not going to try to predict way too much here into the future. But in general, look, if we do travel higher, let's say we break this downside line, I'm going to aim for this territory, for this upside line, because around here, maybe we'll have the 50-day EMA approaching as well. And if that provides good resistance, another decline here could be possible. But then I'll reevaluate this, of course, again later at a later stage. But first, at this point, that's a tongue twister. First things first. What I'm looking at is this downside line. I want to see if it holds. If it holds, great. We could consider a move lower. But again, at this point, I would say maybe I would rather stick to a drop somewhere below the 66.12 territory in order to get a little bit more excited with the downside. For the upside, the only upside that I'm aiming for is this upside line here, tested from underneath. And maybe, like I said, we could also test the 50-day EMA here as well. So now jumping into Ethereum, guys. So this one's a tricky one. Okay, here we broke the highlighted zone. I talked about this. We moved higher, great. We tested that 1788 zone. We actually cleared it, and this was the highest. This is the highest point of September of 2022. We kind of really ignored it, to be honest. So I think I have to adjust this, and I'm gonna mark the current highest point of March near the 1846-47 zone right here. So if you're looking for some upside, guys, again, I would rather stick to a break of this area. Look, the fact that we're still holding above the highlighted zone here, that's, of course, that could be seen as a positive. Where this area is roughly around the 1715, 1743 territory. Okay, that's in a way that's great that we're holding above it, but again, we're also watching what I've talked about yesterday. We're watching the whole kind of XRP saga. You know, what's going to be the outcome, and yeah, how all that is going to play out. But let's not over speculate on this too much. Let's say at this point, excluding all the fundamentals purely from the technical perspective, yes, I'm cautiously bullish because we're still above this highlighted zone, but I'm gonna get more bullish if we do push above the 1847 territory right here, because a forthcoming higher high would be confirmed, and we could then start targeting that psychological $2,000. For the downside, you would need to see at least a drop below this highlighted zone, but then we'll have the EMAs here on the way. So we have a bunch of a good potential support levels. So the support area around here, maybe it's near that 200-day EMA here, could play out nicely. But hey, look, at this point, I would say let's be careful. Let's wait for that confirmation break and then do something about it. Now, jumping into Forex, guys, AUDJPY, the first one I want to pick up here, and yeah, there we go. So it started kind of gradually declining, and it started kind of flirting with these with this key support area. Let me just highlight the whole thing here. Oh, not this one, but this one right here. So as you can see here, back on Monday, we did kind of come close to the lowest point of December, and yes, we could still see another test of it, so that's fine. But look, at this point, I would say as long as we stay below this 88.55 territory, I'll continue targeting the downside. Still aiming for this highlighted zone here, although I can see that some of you might say, hey, look, but the MACD is already starting to curve up here. Yes, could be the case, could be the good signal. So in a way, one of the theories and one of the observations that I have and that I made before. So, and I mentioned this in my previous videos as well. So whenever you have like a sharp decline, but then you have a gradual decline like that, in a way, there is sometimes kind of a good opportunity to see a break here to the upside. So we could see, a nice good push back up here towards the EMAs. And in general, whenever we move too far from the EMAs, we still come back and test them. So look, if you want to see some upside, I would say maybe a break of something like this here would be required, or if you don't like that one, then maybe this one's a little bit more steep. So this one has 3 touches here, this downside line taken from the high of the 17th of March. Again, very short-term one. As if we continue to trade below it, I will still aim for the downside. If we somehow manage to break this downside line, great. I will consider some higher levels in the near term, in the short run. And then we could aim for that 50-day EMA or this downside resistance line. Now, Nasdaq, what is it? NZDUSD, guys. NZDUSD, haven't looked at this one for quite a while, but let me adjust a few things here. So first of all, after we found good support near the in the beginning of March here, near this 0.6085 territory, we started pushing back up. Look, in general, the issue that I have here with this pair is that we're currently oscillating around the EMAs. The EMAs are coinciding, all of them, 50, the 100, the 200 here on my chart. So at this point, I mean, what you can say, I would say yes, although I am leaning a little bit more towards the upside right now here, examining the 0.6283 territory. We're currently breaking it, so that's great. but let's see if we can stay above it. If we can stay above it, this yeah, at the moment we are confirming already a forthcoming higher high, but if we can stay above this hurdle, my next target is around here, near the 0.6390 territory, approximately around here. You can see that it acted as a good area of resistance previously, here back on the 9th of February, on the 14th of February as well. But yeah, if we do see this one's continuing to trade above the 0.6283 territory, then yes, I will go towards the 0.6390 territory right here. Again, I don't want to see this one starting to oscillate, just to oscillate around the EMAs. But again, that's not we cannot exclude that, guys, so just be careful on your front. On the for the downside, I would probably wait for a drop somewhere below this territory, the 0.6167, and then I could consider a move lower towards the current lowest point of March. USDJPY. So yeah, yesterday the dollar index declined. We did have a nice kind of bearishness kicking into the US dollar, and look, in general we stayed in a way below this downside line, and we're now continuing to drift slowly lower. What I said to you yesterday, that from the technical perspective, again, of course, like I said, we do consider all the fundamentals as well. Those are kind of, you know, determine they could determine the trend, the next trend. But at this point, it was an impulse in a way. It seems like the market was kind of already aware of that, and yeah, it was an impulse, and we are seeing this pair continuing to drift lower. The question here is, can we see a continuation move towards my target, the 129.80? At the moment, from the shorter term perspective, what I'm going to do here is I'm going to keep an eye on the low of Monday's low here near the 130.54, because we already violated it a little bit here with a little false breakout. But if we can drop again below it and stay below it, my next target is the lowest point of February, if I'm not mistaken. No, that's the low of 10th of February, near the 129.80, and then I'm going to take it from there. Maybe we could see a bit of a rebound or something like that. Of course, ideally, I would like to see maybe a test of these targets here, but hey, the market doesn't always give me what I want, so unfortunately I'll have to just kind of go with what I have. USD by the way, USDJPY in terms of the upside. Now, previously I talked about this idea here, the 133.55, and in general I'm still sticking to it, because again, look, if we do break the downside line, yes, this could open the door towards some higher levels. We could maybe target now the 133 zone. So if you're comfortable with that scenario, yes, you can consider, like I said, the upside from a break of this upside line. The only problem that I have here is the fact that we are still going to remain below all of the EMAs. It's kind of could be seen as a bearish indication still. So overall, it could still drift back down. So from like just capturing maybe a short move to the upside, yes, it could be a good option. However, guys, I cannot stress this enough. It could still be a little bit on the risky side, because again, don't forget that this downside line is a little bit tentative, so it's not really carrying that much significance in a way. I mean, at the moment, we did violate it here, so that's why I'm kind of saying that it's not carrying too much significance. It's a good line to watch. It's kind of getting respected sometimes, but let's say yesterday it kind of got violated, but again, maybe because of the impulse. So long story short, basically what I would say here is that if we do break above the downside line, I will slowly carefully consider the upside. Of course, the fact that you only risk what you can afford to lose, that's important, and of course have your stop loss in place. That's kind of that's like the holy grail. So yeah, the moment, guys, but at this point in time, looking at just purely what I see here on the chart, I'm leaning a little bit more towards the downside, especially if we fall below the 130.54 territory. USDCHF. So yesterday, so the flag did not really work out as well. So again, we drifted below the lower side of this falling channel, so which could be also part of the bullish flag here. But yeah, we drifted below it, so we broke below the 0.92 territory. I talked about this level yesterday, and yeah, there we go. We're drifting lower. The question here is, can we see a further decline? Well, Look, we violated this 0.9165 territory, which, by the way, yesterday did provide good support. Not to mention the little false breakout here, but eventually did provide good support. What I'm going to do now here is I'm going to mark this little target here, the 0.9125. I do understand we're not far from it, but it seems like what we had here in the past were like nice little false breakouts here, but eventually this area did do a good job. So in a way, if we continue to trade below the lower side of this falling channel, I'm going to still keep it on the chart. If we're going to continue to trade below this lower side of the falling channel, my next target is the 0.9125, and then I'm going to take it from there. Although I would prefer to see a move further south, but hey, as I said before, unfortunately not getting everything from the market what I would like to get. For the upside in terms of this pair, now ideally the 0.9342 territory still is on the table, but look, I think that I will already start looking at some higher levels if we somehow climb back above the 0.92 hurdle, because then I will aim carefully for this 50-day EMA. I'm going to take it from there. But if that gets cleared, then yes, certainly I will get a little bit more excited with further upside. So keep that in mind. USDCAD. So look, this is the idea that I threw out recently, and let me just go back into a 4-hour chart. So basically, what I talked about previously, and this is the idea that I threw out here. Back on the 21st of March on Tuesday. Basically what I said, that if we break the downside line, we push higher. Yes, my next target is the upside target 1 here, which we managed to almost reach. So again, unfortunately, it's never like the exact level. It's mainly the area that we reach. So you have to kind of consider that, guys. You have to consider that. And yes, we can see that the dollar kind of quickly weakened. Oil jumped higher. So Canadian dollar got stronger a little bit, and this is the result we're getting. So one thing for sure, we can get rid of this downside line. Got violated a few times, no longer valid. We have to adjust. So now we fell below this territory, the 1.37 zone right here. Previously, I looked at it as a good area of support, so we fell below it, and now it seems like maybe the downside scenario is back on the table. So my downside target is this one right here, but I think that initially I will have to target the 200-day EMA for sure, because again, if we do break below the 1.3650 territory, somewhere below this, then yes, I will go lower, but initially targeting the 200-day EMA, and then maybe on the 4-hour chart, by the way, the 200-day EMA, because this is what I'm looking at here is the 4-hour chart, and then I'll take it from there, and I'll target the 1.36. In general, this pair, it seems to like to test those nice, beautiful 1.34, 35, 36, 37 levels. So, so keep that in mind. Now, jumping back into a daily chart and going into GBPUSD. So there we go. So it continues to move higher. Look, I talked about this yesterday as well. I said that if we clear this 1.2270, I need to see a clearance of that territory. We may go a little bit higher. So far, we're on the right track. My next target is at 1.2444. I will continue targeting that area if we stay above the 1.2270 right here, the one that we broke. If we continue to trade above it, then yes, like I said, my next target is the upper side of the range where we're currently trading in. So this range has been in play from around like the beginning of December of last year. So if you're looking for something a little bit more trendy and a little bit more, medium term at least, well, you have to wait for a break of one of the sides. Now, in general, if we apply just technical analysis theory, then look, we entered the trade and we entered the range. Sorry, we entered the range and we're currently sitting in it from around the beginning of December of last year. So that's quite a lot, to be honest. The prevailing trend before we got into that range is to the upside. So according to the TA rules, such patterns tend to kind of, it could be seen that this range is kind of just a temporary pause before a continuous move higher. So, but again, for that, a confirmation break is needed. So don't be surprised, for example, if we do go higher here, test the upper side, maybe even get a little false breakout here and drift back down, maybe test one of the EMAs again, and then maybe, do a move, something like that. So this can be frustrating, but unfortunately, that's the game we're playing here. So look, at the moment, I'm gonna keep it short and simple. At this point, I'm considering this my next target to be 1.2444. Let's see if we can reach that, but I will only aim for that if we stay above the 1.2270. If we fall back below all of the EMAs, I will aim for the lower side of the range. GBP Aussie. This one continues to flirt with the highlighted zone right here. So basically, look, I will keep an eye on this one. I will keep an eye on this territory right here, the 1.8276, together with the 1.8325. Look, at the moment, we're just getting nice little kind of false breakouts here and just kind of trading around this area. I'm not really getting what I want here because I want a stronger move above this area. I'm still, let's say, cautiously bullish here, but somehow, yeah, it's just a bit of a tease here. So in a way, could be forming, we're having this little upside support line, but again, it's a very tentative one. Don't be surprised if we kind of break it to the downside here. So I'm going to remove it. In general, what I don't want to see here is something that of a let's say a little range forming. So again, if that's the case, then this might take a while until we get some sort of a clear break. But if let's say we get a nice push here back up, maybe the bulls are ready here to drive this one a little bit higher. But let's not rush into anything here. Let's keep an eye on this one first. But if it starts falling somewhere below this 1.8078 territory, or maybe this 1.8030, I will consider a move back to the EMAs initially, or this then upside support line. Now, GBPCAD, very quickly on that one. Looking at the picture here, at the moment, I would say it's quite interesting. We're near this key resistance barrier, which is the highest point of December. We already violated it, but we're still hanging below it. Now, this, of course, puts more significance on the barrier and just kind of gives us that indication that, hey, we need to continue monitoring that area, that hurdle, in order to, if we want to consider, some higher levels. So a nice good break, a push, and if we do see the pair staying above it, then yes, great, we'll go further north. And by further north, I am talking about initially somewhere around here, near the inside swing low here of this, the inside swing low, or I think that's the lowest point of January of 2022. That's correct. Yes, the lowest point of January could be a nice target. Then, of course, maybe one of these targets could be a nice good one as well. So this territory right here, this little obstacle here on the way higher could be something to consider. The 1.6950 zone, or yeah, if you think that this is way too close, then of course, yes, my ideal target is around here, the 1.7378 level, and that's marked by the highest point of February of 2022. So keep that in mind. So at this point, like I said, we are continuing to observe this little area. Not this one, but this one right here. I need to see a strong move above it in order to go further north. I can see there is another comment in the chat room here. Yep, hello guys, hello to you too. I hope you're having a wonderful start of Thursday, guys. So I hope everybody's having a wonderful start of Thursday who's joining in right now. Look, this day could be an interesting one too. But at this point, look, GBPCAD, although it is very interesting, but we're still waiting for a confirmation move here. This little break is not enough. We needed something a little bit stronger than that in order to go further north. EURGBP, so yeah, look at this. I mean, beautiful move to the upside. So we cleared my all of my EMAs, and we are now trading above those. But what I said to you yesterday when I was covering this one, I said that, hey, if we stay above all of the EMAs, if we manage to first of all clear the last one here, the 50-day, and we push above it, then yes, my next target is this downside line taken from the high of the 3rd of February. So far we're on the right track. Let's see if we can reach that. For the downside now, this is my ideal scenario, a drop below the 0.8720. or 1820, approximately around here. But again, I do understand that, you know, we could be missing out on a bit of territory here. So look, the game that I'm playing here with the Euro GBP is the EMA game, because again, we're currently oscillating in a way. If you look at it, we're kind of oscillating around the EMAs. So if we do fall back below the 50, my next target is the 100 again, or maybe if that gets clear, the 200. But again, we'll have to wait and see. We'll have to, at the moment, we are pushing higher. If we continue to trade above the 50, then like I said, my next target is this downside line. And finally, EURUSD. So, of course, yesterday, big decline in the dollar helped EURUSD to move higher. We pushed to the upside. We reached some of my targets here, like, for example, this 1.0885. Okay, great. In a way, mission accomplished, or should I say, part of the mission is accomplished, because in general, the ideal scenario for me here is a test of the 1.1033 territory marked by the highest point of February, and also the current highest point of this year. Now that's where it's going to be interesting to see if we can actually, see a further move north here. To be honest, I'm kind of leaning towards that, because again, looking at my daily chart here, it seems like we're trying to get back to that 1.1033 territory. Yes, the MACD right now is showing some positive moves. We might see a bit of retracement, don't get me wrong, at some point, but at this point, like I said, I'm targeting that 1.1033 area, and then I'm going to take it from there. And in general, if you can see this, if you just... For quite a while, we did not have the 50 kind of crossing the 200 EMA. Last time we crossed it to the downside here was back in July, mid-July of 2021. And look how long it took us to go down here. And now we're crossing back above the 200. So, and looking at the picture here, the technical picture here, we can see that it's trying to get back to that 1.10 zone, or even maybe above it. But again, let's not rush into anything, because again, if this gets a hold up somewhere around here, by the way, around this territory, that where it's currently already, which already it tested the 1.0925-26 territory. If this hurdle somehow provides that resistance, maybe a bit of a retracement here could be possible, and then we'll have to just be careful here. So look, at this point, if to sum up, I am leaning a little bit more towards the upside, but again, confirmation breaks are needed. So at this point, I would say 1.0925-26 area needs to be broken again, and then I'll aim for that 1.10, 1.1033, and then so on and so on. But again, let's go slowly on this. We already had a bit of a nice push higher, maybe a bit of a retracement here could be possible back down. But if we stay somewhere above that 1.08 territory, somewhere around here, so something basically like this here could be possible, so keep that in mind. For me, to start aiming for some lower levels initially, I would like to see a drop below the 50-day EMA, and then maybe the 100-day EMA, or even the 200-day EMA. So let's keep an eye on that one. But if that gets cleared, look, my very bearish scenario is from around here. Of course, obviously, yeah, that's a drop below all of the EMAs, a drop below the key support zone. And then, yes, we could start aiming for that 1.0222 territory, somewhere around here, or maybe even lower. But again, we're a little bit far from that right now. So let's see, let's continue examining the upside, but some confirmation breaks are needed. So guys, right, I can see the last question here, USDCHF, when we combine technical and fundamental analysis. I mean, for short. Okay, USDCHF. As I said, this one's a tricky one. Again, I am look. Of course, a lot will depend on the dollar and in general the interest rates, and if you are overall bearish on the dollar, yes, on USDCHF could be your case, because again, CHF is also seen as a safe haven, so maybe then we will see some declines in the stock market. Again, this is where you need to control. So if you consider also a decline in the stock market, then yes, CHF, JPYs are one of those which can go lower. However, another tricky moment is the whole banking issue with the Swiss banking issue. Because if suddenly that starts going out of hand. I mean, even if the dollar is going to be on the weaker side, the Swiss franc might be, getting weaker faster than the dollar, for example, and then you would see USDCHF actually pushing to the upside. So just kind of be wary of that. If you think that the Swiss banking system will stabilize a little bit here in the near future, then yes, we could see USDCHF maybe declining. But if that's not the case, then again, just see it's going to be a bit of it could be a battle of the weaker ones. So just keep an eye down. But another thing, if the interest rates in the US start getting higher, USD could push back up. So just also keep that in mind. That's why I apply technical analysis on in order sometimes to just to kind of consider the short-term moves. And in general, I try not to go way too far into the future, because unfortunately this is something that I would like to have, a crystal ball, but unfortunately I don't have one, and that's why it's a little bit tricky. So that's why I just go from what I have, what I see that day, that week, maybe that month even. Yeah, maybe commodities are the ones that you can consider a little bit more longer term, but sometimes with the currencies it's a little bit tricky. But again, let's see how that's going to play out. Again, at the moment, like I said, I'm cautiously bearish on this pair. But I need to see, let's say, further declines. For that, I need to see a drop below this territory right there. So guys, once again, thank you very much. I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate that. So I hope you found this useful. Obviously, probably one person here did not find it useful. But hey, unfortunately, I'm not maybe the smartest person in the room. But hey, like I said, I tried to help out. I mean, look, I'm a trader myself, and so I need to I'm going from what I do have experience in that. So I go from my knowledge, from my previous experience, my trading history as well. So, and I apply that in combination with the fundamental analysis on what's happening with the central banks. So guys, look, I hope you found this useful, and really appreciate your views, your likes, your comments. Really appreciate that. So thank you very much. If you want to catch me tomorrow morning, as always, at my daily pitch international here with Easy Markets at 7 o'clock GMT time, I will be happy to see you here. And yeah, I'll pick up on some of these instruments, some new ones, and then we can go from there. So have a nice trading day. Don't overtrade. Today's Thursday. Yep. Like I said, we could see some crazy activity after the Fed. What's the word? After FEDmath. That's why I called it this way. So we can have that after FEDmath today. So just be careful. Yeah, and we'll go from there basically. Thank you very much, guys, and I'll see you tomorrow. Bye bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.